Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, 20th day of September, 2016, and this is the Daily Report for Gold and Silver. We do have precious metals nominally higher to unchanged, in essence in a holding pattern, awaiting policy decisions tomorrow by the Fed as well as the Bank of Japan. We do currently have gold trading up about $1 to $2 higher in spot at $13.14 and change, with a low today of $13.12 and the high today $13.17.92. Now, as far as COMEX goes, COMEX is currently at $13.18 with a low today of $13.15 and a high of $13.21. We did put out a buy recommendation in both gold and silver. We'll go through that on our first chart, but let's first take a look at silver. Silver is trading higher this morning, but nominally higher. Let's call it unchanged at $19.2950. That, of course, is COMEX. When we look at spot, spot is at $19.22. Let's take a look at our first chart. Let's talk about the trade recommendation we put out today. So, traders, the first chart that I do want to look at today is a daily chart. It does have a couple of different fib retracement levels. It is in candlestick format, and I want to really use this chart to talk about the trade recommendation we put on today, as well as the rationale behind where we placed our stop. First, to the buy side, we did recommend initiating long positions in gold and silver. Traders taking that call, and COMEX got in roughly in this area. It's currently trading at 18.20. It looks that's where it settled for the day. Market was at around 13.17, so roughly in this area, but it was a very, very meek day. Market in essence closed fractionally higher on the day, but as far as I'm concerned, almost in essence unchanged. Now, we talked about the fact yesterday that as this market has been coming down and has absolutely been in a corrective stage, we absolutely hit, I believe, this double bottom at around 13.05. And that occurred on Friday of last week. We can clearly see it. It is this low here. It absolutely matches up with these series of lows here, as well as these lows here and this low here. So we've got really good historical data that represents why this level of approximately 1300 to 1305 should be a strong support level within the market, first. Secondly, yesterday we identified a key reversal pattern. It's not the strongest of the two-day reversal patterns, but this is a bullish harami. And then we talked about getting a confirming candle today. A confirming candle must be a higher high, higher low, and a green candle. Now, as meek as this candle is, it does meet that criteria. However, that's not typically what you look for on a confirming candle. A confirming candle, it should have some length to it. I'm going to try to illustrate what I'm talking about, but it should have some length to it and look something like this. However, we have an unusual circumstance, and that is that market activity is at a quiet point awaiting news coming out tomorrow. So my sense was we could wait for the announcement to be made, watch the market spike up, and if in fact we're correct and there is no rate hike and the market begins to trade up, we will miss that first part of the move as we have before. I don't want to do that. That is the primary reason that we put on this trade today. Now, the caveat to that, the downside to that, is if in fact we are 100% wrong, meaning the announcement tomorrow is that they're going to initiate a quarter point interest rate hike, then we could see this market come under pressure and it would stop us out, but it stops us out with a pre-designated amount of risk that we're willing to play or place into this particular trade. But as I said, I want to get a little bit of a jump start because I believe that the probability is pretty high, meaning it's about an 85+% probability that we won't see a rate hike. And that's where I feel that we've got a pretty secure bet here. So traders, maintain your current long position, roughly in this area. Market's currently 13.1790. And maintain a stop below 13.05. That, of course, is going to be December COMEX contract. For those that trade spot, you simply want to subtract $4 from the price of entry and then subtract $4 from our stop recommendation below 13.05. You'd put it below 1300. So traders, we also made a recommendation to enter the market in terms of silver from the long side. Silver has just been a runaway freight train. It has been moving in leaps and bounds. As this market rallies, it rallies to a much greater extent than gold does in terms of percentage gains. It also, in terms of drawdowns, when the market's moving down, it does have a greater percentage drawdown. That being said, we did recommend entering from the long side. I believe that we recommended this at 1929. Market's at 1932. What's important, though, is the stop. Now, in terms of placing some sort of stop without risking $1 or so on the trade, I am recommending that we place our stop below these lows here, right here from this low candle of Monday, which come in at around 1869. So traders, maintain your current long gold position, maintain your current long silver position, maintain your stops. We will talk to you tomorrow after the FOMC meeting releases its decision. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow following the FOMC meeting statement being released. Have a great day. Bye-bye.